Hello, everybody. How are you guys doing tonight? All right, it's time for the daily factor. Let's check the market first, of course. And that's good to see. Look at that. This is a 30-minute chart, but it looks like S&P futures are extending their gains even past where we were at the close. Or I guess that was the 2 o'clock bar. Then we pulled back a little bit. But the 3 o'clock close was right there. So the close was 67.80, and right now we're trading 67.97, 17 handles higher. Sweet. Jackson, chill out. You want a treat? Who wants a treat? Come here. Good boy. All right. Jackson, just chill out. Quit that. You have food in your bowl over there. Go get your food. It's over there in your bowl, buddy. Hey, Chad. He's knocking the lid off his dog food, and he's got food in his bowl. All right. Let's see what's going on with Bitcoin. I'm guessing it's up. Yeah, I mean, it looks good. Hopefully we get one more update tomorrow, and then another update Friday, then another update Monday. All right. So let's check out this max factor. So tonight I figured we do two things. We'll do Tesla Tuesday. I have a Tesla Tuesday slide prepared, but there's only like 4 of them or something, 5 of them. It's going to be a quick one. So then we're going to do Bitcoin Tuesday also. I don't have a slide prepared, but we're just going to go over to Stock Tools. It'll be just good. What's up, Froggy? How you doing, bud? I mean, it'll be better. It's going to Stock Tools if I made a slide, but we'll do the Tesla slide first. Okay, on yield, look at this. TSYY 238. Of course, it's dropped in 90 days from 863 to 604, 30%. Anyway, Tesla, on the other hand, dropped from 813 to 765. That's not great either, but it's about 6%. TSLW dropped from 3403 to 3273. That one's from Round Hill. That's about 4%. And TSLP from Curve went from 21 to 23.05. It's a nice little 10% move up. And TS2 went from 24.34 to 25.80. That's a 6% move. If you look over here at the stable decks, they're all about equally as unstable. Obviously, TS2 is going to win. Let's go do our own investigation, though. That darn TS2 is impressive. I mean, because TSLP is no slouch. That's over half a year. So, I mean, it's a short time frame for sure, but it's not. I've seen a lot worse. You know, goes from 24 and a quarter to 24 and a quarter to 25.80. I mean, with the $6 dividend. The other thing, TS2 paid 6 in half a year, so that's 12, about 50%, and it looks like TSLP is paying about 5.5 on 20, about 25%. I mean, either one of those could work. TS2 is the double winner, though, winning on offense and defense, but it's a short time frame. It is a short time frame. Let's see how TS2 does against TSLA. But yeah, TS2's editor's choice and the metric choice. This thing's impressive. But I mean, of course, Tesla's been having a great run lately. Over the same time frame, Tesla pays no dividends. So Tesla went up 25%, but if you annualize it, 54%. So Tesla went up 54%. And that was enough to cause TS2 to go up. Forget about the NAV, just on price. Or I mean, forget about the dividend. Their price is 24, 25. I mean, it's up about 5 or 6%. Yeah, it was 6% actually. Well, it was 6% on the metric, but that was for the quarter. But in any event, that's not bad. Because really that's 6% in half a year. So it'd be 12% in a year if you annualized it. So Tesla needs to be up 54% for TS2 to be up 12%. So for TS2 to be flat, Tesla probably have to be up 40%. But that's not terrible. That's not terrible at all. Let's run that against, let's run TSLY against TSLA. And then after this, we'll do the Bitcoin. We'll do the Bitcoin show. All right. TSLY's NAV was nowhere close to flat, down $20, but it was over a lot different time frame. I want to do it over the same time frame. So I'm going to try to do it over the same time frame. I don't remember the exact dates. Oh, shoot. But yeah, that TS2 is efficient. Yeah. Tried to get just about a half year. 57. All right. Close enough. I mean, it's close enough. So TSLA was up 86% in this example, annualized. And TSLY was down 70 cents, which is about 8%. So it looks like, and that's really 16% if you annualize it. So it looks like for Tesla to be flat, Tesla would have to be up maybe 100 or something. Definitely less efficient than TS2. Of course, TS2 has part of the fund uncapped, and they also have leverage on part of the fund. So anyway, all right, let's get on to the rest of the show. But I'm obsessed with checking out how efficient various funds are. But that was a good look for TS2. TS2 is way more efficient than anything else that I've seen. I guess let's check it against TSLW real quick. We have the dates now, so let's just run TSLW. Let's see what Tesla would have to do for TSLW's NAV to be flat. All right. Well, TSLW's NAV was down 75 cents. It's about 2.5%. So it'd be off 5% annualized. So darn near flat. But it took Tesla being up 86%. So probably 90% or something might make it flat, something like that. All right, let's go to the next one. Let's see, where is this one? Okay, yeah, I had it open already. Okay, so we're just going to let's do Bitcoin funds, and let's do, I guess the max factor is 3 months. So if we're going to do the max factor, it'd be fair to do 3 months. We can also check a shorter time frame, but let's just run it for 3 months and see which the best fund's been. Look at that. And I didn't plan this or anything. It's blocks for the past 3 months. That's amazing, even after this pullback. I know it wasn't anywhere close for the past month, but anyway, because I was looking at the past month. But yeah, for the past 3 months, it beat its parent by 15%, which is impressive. And it itself was only down 6%, and that's after this pullback. Look at this. BTGD second. That's a good one from Quantify Funds. I mean, or that's one that people like. I don't think it's not income though, but so it really shouldn't count in the max factor. But still, it's impressive that it's doing that well. But it's a growth fund. Then look at this, Coney. How did Coney get on here? There's got to be something. I guess Bitcoin is just getting drilled so bad that all the things that are basically Bitcoin are down 25, 30%. Maxi's down 40%. BITX, that's leverage, right? So that's down probably double. Look at IMIS down 46%. MS2, the mighty MS2, man. TS2 looked great, but MS2 doesn't look great in this one. But it's a totally different underline. It's a totally different underline, and this underline's been down, whereas Tesla's been up. So TS2 won on the upside because they have half the fund uncapped. But on the downside, they have half the fund uncapped. So they're free to go down unhedged or unbuffered, not even buffered by options. Plus, they use a little bit of leverage. So that makes sense. So that's the cautionary tale on the Rex funds. All right. Well, man, that's impressive. Okay. Well, let's also have a 1 month and a 1 week division. Let's see who's in the 1 month. This can't be right. Yeah, it is. Look at this, BCCC. Now, for the past month, has been ugly. Oh, you guys can't see that, can you? Gosh darn it. I'm sorry. My bad. At least I figured it out. Okay, well, look, here's all you missed. I mean, because I want you to believe me. Look at this. Well, it was running perfectly when you guys couldn't see it. It really was. Anyway, Blocks really was number one on the 3 month list. It was down like 6.5%, but it was less than any of the other ones. Let's test my memory here. 3 month. Yeah, Blocks is down. I think it was 6.5. But no, that's everything that we want, just Bitcoin. All right. So just Bitcoin. I guess for some reason this chart stuck or whatever. But yeah, Blocks was number one on this one. Okay, let's go down to the 1 month. It was working perfect when it was over on this screen. We'll just try 1 week, whatever. Okay. So 1 week, this hasn't been a particularly good time for, I think the crypto one's broken because it's on Yomax. There it is, Blocks. And what did I say? I said 6.5. 0.63. Anyway. But yeah, look at this. That's a great look for Coney over the past, that's over the past week. Gosh darn it. Well, the chart I want to show you is not working. All right. What are you guys doing? Yeah, winter should be number one on, and it is looking more and more valuable. But did I hear today that, didn't I read it on Twitter that Mister's going to maybe be included in the S&P 500, or is that just people starting a rumor that want it to be? I mean, I heard SanDisk made it. And so that didn't really surprise me. And I heard Mister was on the bubble because one of you guys told me that. All right, Marcus, let's look at your idea. I've almost tested that before. In fact, I did, but for some reason my spreadsheet broke. But a long time ago, I built a spreadsheet and I went back and I tested. It was before Crash came out, when I'd been doing this maybe 3 months. And I tested a guy that had $100,000 and put it all in Tesla. And then I had another guy that put it half in Tesla and half in Tesla. And then I had another guy that put it in Tesla, but spent the dividends on Tesla, spent half the dividends on Tesla, and that guy did the best. And then, and whenever they brought Crash out, I was going to go back and build one more guy, but I never did. Now with AI, I probably could, but build one more guy that had Tesla. He spent the dividend half on Crash and half on Tesla. So until he got to a third, but he just kept a self-supporting position of the three of them. It'd be easy. I should just tell Claude to do it. But Marcus, your idea is Tesla, and Crash. Yeah. All right, so I need to go over here where gosh darn it. Let's look at that really quick. That's a good idea. Let's go into Portfolio Visualizer and let's just put that in really quick and see what happens. Back test, portfolio. What percentages? I guess we can just go a third. We can make it three of them, but watch this. I'm really good at doing this quick. I do this all the time. We'll go 34% Tesla and 33% Tesla, 33% Crash. Yeah, I mean, you wouldn't think that could lose, could you? So let's compare it to someone that's 50-50 Tesla, and see if the Crash really helps us or hurts us. I'm thinking it might hurt us. I don't know, but and then let's compare that with someone that's all in on Tesla, just to show what you shouldn't do, or to show the riskiest core. I mean, it might actually be great because Tesla's been up so much lately. I don't know. We'll check it out. So, all right. So we're going to run this right here, and we want to make sure that we have 100,000. And we're going to, but I always figure out withdrawals because these are to live off of. So if you have 100,000, you want to live off of 1.5% a month. That's no, that's not 0.75% a month. That's 8%. That's double the 4% rule. So you can go cash flow because that's a reasonable amount. Withdraw fixed percentage. So this is double the 4% rule, withdrawal frequency monthly. And also you want to make sure if you do this to hit display income so we can see how much income is coming off the various assets. And also it's important that you rebalance on something like this monthly because, they get out of balance and they won't hedge each other anymore. All right. You ready? Which one do you guys think is going to win? Can you see that? I hope I'm done. Anyway. We had to do this because Stock Tools wasn't working for some reason. We can go back and check that later, but I swear to goodness that Blocks really did win the 3-month contest somehow. I mean, I guess it was just up and got so far ahead, even though it's pulled so far back, it just got such a head start. That thing's amazing. All right, so here we go. So the third is up 4.3%. Something else we want to set is year to year. We want a month to month. Sorry about that. All right, here we go. I'm trying to think. I'd say the 50-50 will win. Okay, the third is 18.9% compared to the benchmark. We didn't really set a benchmark. I think it's set to the S&P, which isn't a good benchmark. We should have benchmarked it against Tesla. In fact, I'm going to go do that. Let's see. The benchmark is right here. Benchmark ticker. Yeah, it's benchmarked against Vanguard. We want to bench. I wonder if they'll, yeah, we'll benchmark it against Tesla. Okay, so here we have it. The third made us 18.9% total return. We got beat by the benchmark pretty bad. Had not a super high standard deviation. That'd be like having a VIX of 20. So that's actually not too bad. Maximum drawdown of 14. I think that'd be like having a VIX of 20. Anyway, okay, but not near as bad of a standard deviation as 50-50. So the third did work, Marcus, but it cost us too damn much money. We only made 18.9% CAGR, and my way, we had more upside, but look at it. We had twice the drawdown. The standard deviation was through the roof. But we came closer to the benchmark. And then what do you think Tesla did? Just Tesla by itself. Oh, that's not too bad. 33% drawdown. 40, it's actually better than the 50-50 port. Well, it's safer than the 50-50. Okay, but anyway, so now check this out. We can see actually how much the income the portfolio produced. Now we withdrew the 8%. So remember, these results are after the 8% coming out. And you can go down here to the bottom and it shows you this is everything you need. I usually look at the I usually go down here and look at the upside capture and downside capture. So the third only caught a quarter of the upside because we had a short one on, but we didn't catch much downside either because we were hedged. Now the one that was 50-50 caught about 80% of the upside and caught about 94% of the downside because we weren't hedged, but that one had the best total return. And then the one that was just all yield max caught 61% of the upside and 88% of the downside. And then, of course, the underlying caught 100 and 100. And then I also look at, I don't know if that perpetual withdrawal rates, I wouldn't trust that. I also look at the Sharpe and Sorrentino. So the Sharpe on just having the stock is 1.35. Just having the stock beats the others on a risk-adjusted basis, and also on a Sorrentino basis. So, but then sometimes I like to look, because if you just wanted to live off the income, and you could also, this is how much income the portfolio actually produced, and this is each year. So portfolio one produced $33,000 the first year, and then $46,000 the second year. So on $100,000, that's not bad. Now we didn't take that much out. We only withdrew 8%. We could probably knock this up to 12%. But portfolio two made about the same amount of money. Really having the inverse one hurt us a little bit on income. But then if we just all in the yield chaser's dream over here, $80,000 on income on a $100,000 account, 61 the first year and 80 the second year. Now let's look at total returns though, and they were all positive on total returns. They just got beat by the parent. Hang on here, yeah, that's income, and these are the annual returns. So Tesla was up 126% last year, and so far this year it's up 12. So this year all three strategies are hanging in there, but it hasn't taken off. But last year in a bull market, this is typical of covered call strategies, of course. And the one with the inverse lagged the worst, but it had the best drawdown. If you're on margin, you probably want this one. Anyway, do you guys like that? I like doing that kind of stuff. Yeah, we could do the allocations are key with that. Not sure, maybe 60, 10, yeah. 60, 25, and 15. We'll just try it. It won't take any time at all since I've already got it set up. All right. Yes. So 60 on Tesla, going for that growth. 20, or I'm sorry. So yeah, 60 on Tesla, 25 on Tesla. Okay. I like this. Just enough income to get, to make a little income. How much do you want to withdraw a month? Because that matters more than anything else. We can make it where you withdraw way too much and it'll make all of their yields negative, So, and then 15% in crash. All right. I'm going to adjust one of the other ones also. So I'm going to say 80-20 because we're only trying to take 8%. And then we'll leave this other one. Yeah. 100 in Tesla. Isn't there an inverse Elon? What's that called? It's called, is it called Leon or it's Elon and Ford together? I mean, it's long Tesla and short Ford. I don't remember the symbol, but we could do that one. I don't know if that's been around long enough, though. We'll just stick with these. All right. You didn't say how much you want to withdraw, so we'll just keep the withdrawal at 8%. All right. So Marcus said, look at that, got 46%. Pretty big standard deviation. Of course, we're going to underperform the benchmark. 27% drawdown. Okay. So my 80-20 got 70%. Almost, I got closer to the benchmark. Standard deviation was gigantic and the drawdown was 36. So yeah, my drawdown was quite a bit bigger than yours. Okay. So let's go down and look at the income, see how much income those funds put off. Okay. So my idea, the 80-20 just put off $14,000 in 1 year and 20,000 in the next year. So, and I'm actually making it give me, well, it can still support the withdrawals because the withdrawals are only $8,000. So, I mean, that's all the income you would need if you didn't want to sell any stock. You could even do a little bit less than that. Even this year, I got 14,000. You pay yourself 8, still get a lot of upside. Anyway, all right. Yeah, but the allocations are key. Yeah, winter is looking more and more valuable. I agree with that. Am I sharing the screen or something? My phone just went off. Am I not sharing the screen? Yeah, no, it's all good. All right. Yeah, I'm happy we didn't have a big dip today. What are you going to do, Marcus? If we have a big dip, are you going to buy something? Do you have something on the shopping list? I'll turn this off. Put that over there on the couch. Yeah, check Elon and Musk. Okay, okay, yeah, heck yeah, let's check that. That sounds like fun. All right, so we'll do that over here because no one cares about Tesla. Let's just go Elon, battle shares. That's what it's called. Musk isn't a ticker, I don't guess. Is it? Did it? Look at that global music industry. I've never heard of that one. Music licensing. Anyway, but that's fine. So do this. Let's go. We'll do 50% Elon, and then and we'll do 50% just Tesla. And we'll see we'll see how that compares to the other ones. Unknown symbol. Where's the unknown symbol? I mean, it's right there. Try it again. All right. So Marcus's way got 30%. My way got 43, but was way riskier. Had about 50% higher drawdown than you did. Oh, this way is 38%. I wonder how much that one pays. I guess Elon doesn't pay a dividend because there's no portfolio income. You didn't do bad on returns, but I've been working on, let me show you guys this. I'm practicing, or I'm getting ready to record this right here. The Nicholas Wealth goes full commodities. I'm getting ready to talk about that. And then after that, I wrote 2 scripts today. So after I get out of here, I'm going to record this one, and I'm going to record the one on Ono. I have the script written for Ono, which is the, what is that? The Tuttle Capital hedge fund style, or they call it a no bleed tail risk. So it's supposed to be a tail risk fund that'll go up big when volatility goes up, but it's supposed to not do this. What most of those other funds do is something like this. They bleed, but you can use them for a trade, but you can't set it and forget it. You guys know that. I mean, it was at 100 in April. It's not near as bad as this one though. Anyway, so I don't know how they're going to do it, but I have the script written. So this one dropped from about 260 to 50. I mean, if you hit the timing right on one of these, do you guys ever trade UVXY or UVIX or SFIX or anything? Yeah, I'll record that one. I'm going to do the Nicholas one first. I think there's more general interest in the Nicholas one. I'm also going, I don't really think anyone except I'm interested. I know you guys are too, but I think the Nicholas one, and I really think the GAX, if I could do one on GAX, I may add GAX to that other script because it's not enough to just talk about on its own. They really just kind of changed the portfolio. But I may add that one in with the commodities and just give an X funds update or something. I think that'd be a good video. But heck yes. Yeah, it's like a reverse SFOL, I guess. Exactly. But I think it has elements of SFOL in it. I think it's going to also do that. Like I say, it has like 4 different things. It's gonna monetize volatility crush, but it's gonna use that, from what I can understand, use that to buy out of the money insurance. I bet it probably won't pay a yield. It's not an income fund, but I bet it does the SFOL strategy for good times. But then it also, or I may be getting confused on the SFOL strategy, but it does. I think it's going to do some short volatility strategies, but it's going to use those to finance. It's going to use the income off those to buy hedges. So, I mean, but it has like, and then not only that, then the other thing it's going to do is it's also going to short. I think it's also going to short ETPs or something, because there's some kind of play when volatility spikes. And Matthew was talking about this on the show. Not to short. He likes to buy puts right after volatility spikes. And anyway, but yeah, so it has that element in it too. It's gonna strategically buy and sell options in ETPs, and it's going to trade the futures term structure, which I think is what SFOL did. And then at the same time, it's going to have some kind of tail hedge on it, but it should be really interesting. And then there's something else too, probably a fixed income component. There's like 5 components, but I'm going to do this other one first. But I'll get that Ono one out. And then I have a bunch to get out. Do you guys have an opinion on this? Or Marcus, do you know about, I think I left it open. Yeah, I left a window open to show you guys. Well, no, not that window. I guess I closed it because I was trying to close windows. But I opened a bunch of stuff from Discord, and there's one, maybe that's it. Yeah, it's over here now. Gosh darn it. Okay. So there's a Rex one, but is this going to be the fund of funds? I couldn't tell. What's this? Let me find it. Yeah, Rex ETF Trust. It was really basic. It didn't. So it's the income max option strategy. Doesn't say what the underline's going to be. It's just super generic. It's going to be weekly. It's going to do it's for current income, and the secondary objective is upside with the limit, of course. So just like Yield Max or just like Round Hill, or a lot of them have this current income, and then the secondaries exposure to the underlying. But but it really didn't. It didn't say anything in here. Just as the most generic, just the most generic one I've ever seen. The fund seeks to generate income from its option strategy, primarily utilizing option contracts. Really? Okay. Tell me more. The fund's option strategy is applied consistently, whether the underlying security is held directly or through synthetic exposure. Okay. It still doesn't tell me anything. I want to know what the heck you're doing. I mean, and then they go into just the most basic stuff. In general, option contracts give the purchaser of the option contract the right to purchase or sell the underlying asset at a specific price. I mean, it just couldn't be any more generic. The fund will hold cash or short-term treasuries. Okay. The fund's non-diversified. So I have no idea. What do you guys know about Income Max? Is there anything? Prospectus says appreciation and income. Okay. Well, the fund's actively managed exchange rate fund seeks current income and exposure. Okay, you're right. It doesn't say secondary. You're right. It says current income and exposure to the share price. But anyway, but that's still fairly standard. It doesn't mention like I also downloaded the one for Vibe, and Vibe's pretty generic also. But it does say they're going to be selling options on the stocks in the Vibe fund. I mean, and here's the title. Look how complicated this is. Principal investment strategies, and they have 3 of them. I mean, and I pretty much described them to you already. And then look at this. They're going to do some SPX at the money strangle strategy for shallow hedges. So I guess they're buying strangles. Yeah, they're systematically going to purchase strangles consisting of at the money call and at the money put. But that's a straddle, though. A strangle's an out of them or whatever, representing 20% notional value of the index's exposure. So if this should make money just by the market moving up and down. Strangles are established on a daily basis across the nearest Friday expiration. They reduce path dependency to smooth returns. So even when you're massive, like out of the money hedges don't kick in, just the daily movement should give, should do something. But I would think that strangles bleed, but they're probably, but then in addition, they have a put ratio spread for deep drawdowns, but then they have a VIX call relative value strategy. They're probably going to sell parts of the VIX curve and buy the other part. And I think that's what that means. Back tested model. I mean, this one almost has too much information. I'm like, damn, I mean, and the other one just has no information. Maybe I should just do this one. This one does look pretty good. But they're going to do, so they're buying strangles at the money. I think they said strangle, they meant straddle. A straddle's at the money, a strangle's out of the money, but they're saying at the money. I bet the words are right. And that would make sense because you buy 2 at the money options. It bleeds if the market goes nowhere. But if they're actively trading, when it goes up, they'll take them off and they recenter, and then it goes down and they'll take it, they'll kind of work the grind that way. That's cool. There's no other funds that are doing that. And then a put ratio hedge is where they sell 1 put at the money and use that to buy like 3 deep out of the money puts. And if the market makes a big move, you're set. But that has a huge valley of death. And then I don't really know what the VIX call relative value strategy is. Probably. Oh, well, look at this. The strategy sells a call spread with the short position in the 30 Delta VIX and the long position in the 10 Delta. So they sell a 30-10. Okay, so they sell a call spread. So that brings in money, but they simultaneously purchase exposure equivalent to 0.26 times the notional value of the. Anyway, this is right up my alley. But anyway, you guys can see it's kind of complicated. All right, Michael, what are you doing? GOF looking good. Thinking it would bounce off $12. Heck yeah. Let's pull up. We'll take a look at GOF. I just need to have Matthew on the day it comes out because he can't really talk much about this. He gave us hints, but all he could say basically is it's in the prospectus. Oh yeah, this is that closed-end fund we looked at the other night. Yeah, this is it's kind of got a little bit beat up this year, but a lot of things have. I mean, it's not down as much as Bitcoin is, or Bitcoin's probably up on the year. But anyway, what kind of yield are you getting out of that? About 17.5. That's not bad. Does that thing drip a NAV, Michael, or is there rights offerings, or what else do you got going on GOF? I remember when we did the closed-end fund night, that was a good one. See, check this out. Here we go. Let's see where GOF finished on our test. Where is it? ASGI number 1, CLM. Oh yeah, you guys can't see. I know. At least I know now. I know before anyone said anything. I could have sworn GOF was on this test week. Oh, there it is. Okay, so GOF paid about 18.2 on a trailing 12-month basis. Went from 14 to 12. Like you said, you thought it's going to bounce off 12, but it's right there, down 19%. But the NAV's down 10%. Just kind of got beat up compared to some of these other ones. That's why it's not ranked higher. This ASGI and CLM and CEFS really look good, especially CLM and ASGI. CEFS doesn't pay that much. YYY doesn't look terrible. FSCO, FACS. We'll have closed-end fund Friday in a couple of days. Yeah, we'll have closed-end fund Friday. Heck yeah, I hope it bounces by that dip. CEFS is more of a hedge, but you like it for a hedge. Doesn't it? I just thought it was a fund to funds, that it was by Saba, and it was an ETF that used different closed-end funds. But when you mean it's a hedge, do they have defensive plays in there? Let's look over here let's look at the top 10 holdings. Oh, CEF, that's the gold and silver one. I was thinking of, I'm sorry, my bad. You're saying CEFS. Yeah, the Saba, okay. CEF looks like a hedge because it's Sprott gold and silver. Yeah, okay, they're defensive ones. Okay, well, cool. Heck, I'm all about that. So they have the BlackRock ESG, Capital Trust. Okay, yeah, gold. And they have a little GDX. Heck yeah, this does look like a decent one. What does this pay for yield? 7.8%. That's not a bad looking one at all. What did it lose in October? 22.60 down to about $4. Yeah, I mean, yeah, that's a good looking fund. It took back its March peak. Heck yeah. Let's check out YYY. That's kind of the same thing, right? Maybe not defensive, but this is something else. But this is a closed-end fund though, right? No. It's an ETF. Well, they buy, but it looks like they have, looks like they just have some fixed income stuff. I mean, it has nearly $1 billion under management. It's not the worst looking fund I've ever seen, but yeah, CEFS looks really good, Marcus. All right, so let me show you what else I'm working on. So Vibe really doesn't say much either. It just basically, there's a website, but it just says stay tuned. They don't give away too much. Really, the most interesting one is definitely Ono. Ono's the only one. I swear this Rex thing is just like a boilerplate, fill in the blanks. You can do anything with this. I mean, everything's left blank. Has anyone heard when any of these are coming out? I mean, for instance, like the X funds. Let's look at X funds. That I thought that was coming out today, or the perspective, or something. I thought it was marked the 25th, but then I checked X funds and I didn't see any new things on their website. Maybe it's tomorrow. Huh. Did anyone ever figure out what's going on with Chiax? Where's their? I would have downloaded their trades if I would have seen them. Option overlayment. Maybe the prospectus just says they're going to weekly, but somebody was saying they changed their strategy too. There it is. Download all holdings. So it looks like they hold these, but I'm interested in how they do the options. They have Google, which is good, and Tesla and Palantir open. A little bit of everything. Let's take a look really quick at their options. Okay. All right. So they have the VU, the VUG, the VOT, Freedom 100 emerging markets. Okay, all of that kind of stuff. Vanguard FTSE developing economies or something. Okay, and that makes sense because it's global fixed income, right? Or it's GAIX. It's global. Okay, but then in addition to that, they have. So on IREN, what did they have here? Put, call. Well, on IREN, they have I guess they're just buying puts on IREN. Is that surely that's not right? They probably have. All right. So on Alphabet, what do they have? They have 94. They sold. That's probably a lightning spread because they have stock. They sold one put and they bought a put for their other money. Lightning spread on Alphabet, lightning spread on Apple. And then they have shares of Apple, and they have the same amount of shares that they did lightning spreads on. It looks like a lightning spread fund. They've just turned this into blocks. Lightning spreads on Broadcom, lightning spreads on IRIN. Yeah, they've just turned this into blocks. Open Door, Palantir. I'm looking to see if they have any hedges. Okay, on the VU, they're doing, or no, that's the BOD. It looks just like blocks, and it looks like they're doing call spreads on some stuff on the indexes, and they're doing lightning spreads on the individual names. Yeah, that one's going to be interesting too. And it's also weekly now, or what? It didn't used to be weekly. That's probably the big news. They just turned it into blocks. I swear those other funds look like blocks also. Those nukes and weapons and whatever those are. All right, still waiting on Neo Salty and Titles ULTY. I think they're the last ultra yielders coming around December. Yes, Neo's Alti. I can't wait for that one. What do you mean Titles Alti? Isn't Titles Alti? Do they? I mean, that Rex one, I'm not sure that may not be an Alti. It could have been anything. I mean, it didn't say. It just said, it didn't say even if it was an index or single stocks or a whole line or just a one-off. I was thinking maybe that was. I realized Rex already has one, so I really was thinking that was maybe the Rex fund of funds where they just bought the single stocks and put them in a fund of funds, but it didn't mention that. GX has a lot of new single ticker puts. Okay, I hadn't heard about that. Oh yeah, okay, definitely find that. Hey, I'm with you on GX, but they have put spreads. I mean, that's why they have some puts. Some of them are short and some of them are long. This is just like blocks. And I love it. So, for instance, they have, look at this. They have Apple 100 or 10,355 shares, and then they sold 103 puts at 275, and they bought 103 puts at 265. So they have, that's pretty much 1-to-1 upside and 1-to-1 downside. I mean, that's just like blocks. It just, I mean, if it goes under 265, it gets a little bit extra downside, but still it's basically just the stock falling. So, I mean, this should, that looks like what they've done is they've just added put spreads on all the single tickers. But yeah, then right down here on Vanguard, it says call option, the 265, 280. So they're selling well, that's a different one. I'm not sure what they're doing here. Okay, on VOD, they're selling call spreads. So it's just like blocks. How blocks sells call spreads on ETHA and HODL. I just think it's blocks. I am starting to. I mean, I like blocks a lot. I mean, but I don't know. It depends on. It looks like GIAX is trying to get a lot more competitive. They've added the ULTY strategy. So, or I'm sorry, not the ULTY strategy. No, they've added the block strategy, which is also the QLDY strategy, which is, I mean, this thing might be worth watching. So what kind of yield does it pay? Didn't it used to pay like 24%, which isn't bad. Let's look at it. Let's compare it. But I heard it was doing poorly and people were mad at it. But it's investing in like emerging markets and stuff. I mean, or global, I guess global alternative income is what they call it. So, but I heard it's getting killed on the year, but that should definitely uncap some upside. I don't know what to benchmark it to, but All right, hang on here. Let me just get it since inception. I mean, that doesn't look too bad, but I mean, yeah, I guess 12% in a year in 1.3 years. People probably wanted more than that. The dividend, $5, probably about a 20% dividend or something. Does anyone have any of that? Yeah, I don't know. I'm thinking about a Froggy, possibly. I mean, it looks more interesting than it used to look. Okay, you bought some DLO at the bottom. It deals with people and retailers, has a lot by chart fundamentals with upgrades. DLO upgrades 15 and 19 that revised, and earnings was a beat. Chart has upside 15 and a half to 19. Nice. CMG, Play, and CRBL. So many inserters have been buying high. It's all good. Fundamentals I like. Jack and Pizza. The tech sector is the problem. What's Jack and Pizza? I've never heard of that. Is that like Jack in the Box or something? And Pizza Hut? I've never heard of that. I just don't study individual stocks unless they're Nvidia. I mean, but that's, or maybe a big drug company. Wow. All right. Well, pizza looks like it tastes a lot better than Jack does. All right, Marcus. Yeah, I think I heard somewhere that it was a 24% target fund. Well, that's not, but its NAV was starting to erode. Well, I mean, yeah, I mean, uncapping upside can help the NAV. I mean, would you guys say blocks erodes? Because this is going to be like blocks. Now, maybe not as volatile because those underlines are a little bit less volatile, Tesla and the VU and Google. I mean, but they do have some emerging market stuff in there. So you love GX. Okay, sweet. Very good. Well, then how does FIAX compare to it? FIAC is fixed income. That's right. This GX is equities. Yeah, FIAX looks like T-Oak or something. It looks super steady. Is it box spreads? It almost looks like it's box spreads or something. Or it's probably just short term. It's just fixed income, real safe fixed income. Let's run FIAX against T-Oak. Yeah, that's a good look for FIAX because T-Oak isn't bad. Let's run it against Cashy. Yeah. FIAX looks pretty good. Looks like it only pays, looks like it, yeah, 8 to 12% or something. But I mean, or 8% or something is fixed income. Yeah, that doesn't look that bad. You posted the title. Okay. Hang on. I forget which screen this one's on. Oh yeah, Discord's over here. I just shut it because it was going off. I turned it off because it was. I can't believe they're competing with their own fund or trying. I mean, they do that all the time, though. I mean, they manage Granny Shots, and Granny Shots competes with, GX kind of, or, or whatever. So they manage a lot of funds that are, okay. So it's a smart allocation, high income ETF. See, it says to seek current income while managing risk. Huh. Does it have a ticker or anything? Smart allocation. Huh. Okay, this is something new. Strategy. The fund seeks to allocate capital among multiple asset classes based on each asset class's expected contribution to overall portfolio risk, rather than on capital weighting alone. Isn't this called, there's a name for this. This strategy, I'm drawing a blank on it though. Risk parity. I think this is called risk parity. While capital weightings assigns investment amounts by a dollar amount, with the risk-based approach considers how much each asset class contributes to the fund's portfolio risk. So they balance it on, what is that, on beta maybe? Yeah, they probably balance it based on beta and keep it balanced. Rigorous qualitative and quantitative. Yeah, this one's interesting. Who's the sub-advisor? I mean, who's doing this? That's a good question, Leatherface. I don't really watch GX, but maybe Marcus can give us an answer. I'm going to start watching them. I mean, they only pay 24%, and I like the ones that pay more. But I mean, Blocks only pays 30%, and I love it. And they've just turned it into Blocks. I bet I start talking about it a lot more. It probably didn't capture its last high. I don't really know what it was doing, but it was probably doing just covered calls or whatever, and it was probably not as efficient. So they probably put in the lightning spread. The lightning spread's really, I mean, look how well QLDY is doing. So I have high hopes for the lightning spread. Yeah, I can run against HCal. Let's go look at that. But yeah, this looks good. I'm going to have to look at this later. I mean, it doesn't look like they aren't going to tell you much. Just quantitative and qualitative. They're going to just, I mean, but they wonder if they have, like, the fund will typically hold between 5 and 25 underlying ETFs. Invest in active and passive managed ETFs. So underlying ETFs, not underlying stocks. So a fund of funds, maybe the fund. Okay, so it's, yeah, I get it now. That is why it's title. It's just going to use, so it's probably going to have Granny in it, and then maybe it'll have Blocks in it, or I don't know, maybe it'll have GIAX in it, or maybe it'll have GDXY, but it just has to be under the title umbrella. Yeah, and I bet they do that. I bet it has some gold and some bonds and some equities and then some global equities, and they probably keep it. Yeah, this should be interesting. That should be really interesting. Okay, I'll run it now, Froggy. I just got sidetracked because I'm starting to think that one might be interesting. But yeah, GX is looking better all the time. All right, what did you want me to run against HCal? Was it, FIAX or GX? Anyway, I think we were doing FIAX, so I can do both of them. So let's do GX against HCal. That's not bad looking. I mean, so, I mean, it's good looking on both of them. Both of them had steady NAV. I mean, HCal was a little bit more steady, but I mean, GX was fine too. GX paid a little higher dividend. But yeah, those are, but HCal had a little bit higher total return. I mean, yeah, that's a good comparison, Froggy. Thanks for bringing that up. Yeah, you like that HCal, don't you? Yeah, like I say, I don't know. I don't know. I mean, my guess was capped upside, but I mean, I don't follow it enough to know. I don't even remember what the old strategy was, but it was probably just covered calls. Covered calls are going the way of the dodo bird. All the new funds don't use them. I mean, some of them do, but I'm just saying, look at blocks, look at QLDY, look at WPay, look at, and those are funds that a lot of people like. Now, to be fair, K-Yield uses covered calls, but Howard also uses other stuff. I mean, Howard uses everything, but he does use covered calls. Hey, Dylan. Also, if you check out the dividends paid, it has paid more than the current price to launch price. Oh, really? All right. Are we talking HCal? Because I'm only looking at it since in the time that GX has been around. But yeah, HCal, I could see that. Let's just do HCal to SPY. Marcus, it sounded like it was a fund of funds. It sounded like it was a fund of funds to me. Oh, there it is. All right. Yeah, it's not HCal that's paid out more than this. You're probably talking about FIAX, GX. And I'm guessing it's GX. No. Well, tell me what you're talking about. Yeah, Super Alti. I swear that's called it's called risk parity, and it's a hedge fund strategy, and you balance stuff by beta. So it's beta weighting or whatever. So if something is, and I think people do it kind of innately, but if something's super risky, something has a beta of, or I think it's a beta of 2. Yeah, that's what it is. Something has a beta of 2, then something has a beta of 1. I guess 1's a market beta. So the one that has, so you have twice as much of the beta at 1 as you do of 2. So you have less of the risky one. It's kind of what we were kind of doing with the Tesla, and I was going 80-20 and just trying to make it as least risky as I could, but, to squeeze the income out of it that I needed. But anyway, they'll do it on a quantitative basis and stuff. All right. You're liking Howard more and more these days. Heck yeah. Howard's a good guy. How is KQQQ doing? I haven't checked it lately. Let's run KQQQ against GX. That's a good look for KQQQ. That's a really good look. Okay, let's run KQQQ against QQI. You know what one we never check is IQQQ. We'll run it next. That's a good look for Howard. Look at that. Heck yeah, Howard. Let's run it against IQQQ. I think this is the stablemate of iSpy. All right, well, there we have it. IQQQ is the one. Look at that. IQQQ looks like the dividends are about the same. But that's a pretty close contest right there. That's a good look for that. Let's run iSpy, just because I never look at it, against SPY. Wow. Do you know who does? I think it's iShares. Or ProShares, okay. Yeah, and I think they do daily options, 0 DTs. Unlike traditional covered call ETFs, which often sacrifice upside for yields, iSpy targets both short-term high income and attractive. Well, that doesn't tell us anything. How do you do that? All right, looks like they own the index. That's what I've looked at this before. They own the index and they sell an option. Look, that's for tomorrow, and it's 1.17% out of the money. It's a 68.45, which is way out of the money. I mean, and they sell 500 of them. It's saying dividend yield 1.3, but anyway, but yeah, they get tons of upside with this strategy. It looks like they're totally capped, and I think they're even capped overnight, but they just sell the option so far out of the money. I really don't know how they make any money on this. Well, let's see how much they are making. 7, 10, 15, 4. The dividends vary a bunch. But anyway, whatever, the results are good. I mean, it's beating SPY, and it does 0 DTE options. There's got to be a catch. Yeah, ProShares, SPY and iSpy. Okay, now on this one, they're really close. In fact, iSpy was better most of the time, but iSpy paid 5 on 42. This one paid 7 on 49. Really, that paid more like 6. And so it's about the same. It's very close. Huh. Interesting. I wonder if they're copying each other. Probably so. Probably so. You took a pick. All right. All right. This ETF is the biggest outlier in the list and operates a fund of funds based on the title family, takes risk conscious approach. Yeah, but I said it would have fixed income, some gold, and I didn't say commodities. I wonder if it's going to be like, like a trend following, like CYA, or not CYA, like CTA, where it's commodity trend following. But I think this is going to be more just like strategic rebalancing. Target yields 20 to 30. Well, yeah, high, but much lower than ULTY. So they don't want to be compared to ULTY. So that kind of yield is, I was going to say it's more similar to blocks, because doesn't blocks slip into the high 20s sometimes and low 30s? But yeah, that's that could definitely be interesting if it was another blocks, or if they could make one that had NAV stability. I think Howard's trying to do a risk parity approach. He doesn't call it that, but he has gold and gold miners, and then he has precious metal stuff. Well, not precious metal. Then he has like rare earth stuff, and then he has some tech and some other stuff. I think that's part of Howard's deal too. But yeah, I agree. Curve does it right. So that's in blocks' range. That's darn sure going to be interesting. Will blocks be in there? It's a fund to fund. I wonder if blocks will be in there. Probably not. But I bet they have gold, bonds, maybe some other kind of commodity, and then maybe foreign stocks and domestic stocks or something. But yeah, that's going to be really interesting. There's so many good funds coming out from Tidal, because Granny is really interesting. Also, for all you like an income fund that's decoupled from crypto and pays 20 to 30. So, I mean, the one I'm thinking of is FEPI. I mean, it's not totally decoupled, but it's more like that's more like ChatGPT, GPTY and stuff. There's still some common stuff in there, like yeah, I got you. The K-Yield doesn't have a lot of crypto in it, does it? Well, QLDY has the Qs in it. I mean, that doesn't, so that's definitely not overweight on crypto. It just has whatever the crypto the Qs have in it. Yeah, so that's one. Maybe KYLD. We have let's look at this really quick. I have it open right here. QLD. Let's see what they have. Teradyne, that's defense. They have gold. They have T-bills, but only 5%. Okay, so then they have Broadcom. That's not crypto. They have silver miners. They have defense contractor. Shift for payments. That might be DeFi, maybe. I don't know. Intel, Reddit, Shopify, Vistra. I don't know what Vistra does. AppLovin, BWX, AMD. I mean, that's used to mine crypto, but in NVIDIA stuff. But yeah, not directly crypto. Maybe Coinbase, and Bitmine Immersion, and Galaxy. It looks like they have, some. I got you. Not having actual crypto in it. You don't mind crypto related, but I mean something like Bitmine Immersion is basically crypto or MicroStrategies, right? But you're saying you don't mind like an AMD or something. Yeah, no, I'm with you, Froggy. That I mean, really, if you just look at the chart we've been looking at every day, the one that's gone down the least out of all of them is that QLDY. It's down even less than Chippy, even less than GPTY, and those aren't directly crypto, but they're definitely related. It's down less than K yield. It's down less than ULTI, ULTY, and blocks. YMAG is Magnificent 7. Is that too close to crypto? I mean, it depends. I'm answering the question for Froggy. Yeah. Let's look. Let's run YMAG against IBIT and see if it looks like it's correlated. No. So YMAG barely. Well, YMAG has Google in it, and Google's holding up YMAG. But yeah, YMAG looks like YMAG looks like a place to hide. Maybe. What about Granny? Does anyone know what Granny has in it? I mean, or GRNI? It's probably the same ones that are in the growth fund. I just haven't checked out the growth fund. Actually, I did see it last month. He rebalanced and he put some different stuff in it. Of course, the double weekly payers doing the best. Yeah. And of course, that doesn't have anything to do with why I like it or whatever. I like it because of the uncapped upside. But yeah, that's crazy. Who would have thought? When they filed the prospectus on that, it says it's going to be a daily payer. I mean, in the prospectus it says to provide daily income. Now they didn't. They're only doing it twice a week, but in theory that they could start doing a daily income. You're talking about not having correlated movements with Bitcoin. Yeah. Well, I got you on that. Okay. Yeah, I'll have to think about that. Because it looks like the whole market's pretty much correlated, but there's probably a fund out there that isn't. Probably CAIE, maybe. QLDY is 0DT. Yes, it is. But it's 0DT lightning spreads. That's how they sell it twice. I mean, that's how they can pay it twice a week. But they could even theoretically pay it every day because they sell premium every day. Yeah, I get what you're saying with that. It is absolutely 0DT. But there's a lot of funds that are 0DTE that don't pay 5 times a week. I could think of 6 of them right now. Round Hill has 3. YieldMax has 3. Well, and then Defiance has 3. There's 9 of them that sell 0DTE options. Then there's T-SPY and TDAC. That's 11. I mean, so there's a lot of funds that could do it. I mean, yeah, we are living through history, maybe through a bubble. I don't know. Okay, you were chatting with Google Finance, and it was interesting. What did they say? So they said the correlation between the stocks and Bitcoin, particularly in down markets, is driven by market sentiment. In other words, Bitcoin's just become a leading asset for the whole market. It's almost like you can't get away from it, or because when people have extra money and feel rich, when the rest of the market's going up, I guess they buy Bitcoin. Or when people are making money in Bitcoin, they're also able to buy other stocks. The whole economy's going great, because so many people nowadays are all in on Bitcoin. Let's ask Claude really quick. There may not be such a thing. You guys can't see that. I'll put it on the other screen, but it was just me typing. There's nothing to it, but we'll look at what Claude says together. I just put suggest ETF that pays a high yield like FEPI, but it's not correlated at all to Bitcoin prices or whatever. Let's see what it can come up with. Energy infrastructure, maybe that. Neos REIT covered call ETF. Heck yeah. Anyway, let's see what they say. All right, here are two solid options that should have essentially zero correlation to Bitcoin. MLPD, Global X MLP Energy Infrastructure Covered Call ETF, yields 11%, the 60% expense ratio, writes calls on the whatever that is, the Global X MLP Energy Infrastructure. So the MLPX following a buy right strategy on midstream infrastructure. Yeah, I guess that would have little to do with Bitcoin. I mean, holdings are pipeline operators, storage facilities, energy logistics corporations, completely different universe from tech. Okay, so, and then also they're suggesting IYRI offers an 11.2% yield, invest in REITs. Both use Neos Global X style option writing. You're familiar with from the Yieldmax universe. I don't even know what that means, Claude. Yieldmax has nothing to do with Neon. I don't even know what Claude's talking about. Anyway, so let's look really quick here and let's see how those have been doing. So I need to put this one on the max factor. All right, well, there we have it. That IYRI looks pretty good. RI looks pretty good. It didn't go down hardly at all in April. And the MLPD looks, I mean, here's the other thing. Look lately, Bitcoin's got crushed. Both of these, if you look just here, the last few days are going up, but I guess everything is, it looks like the IYRY is selling off kind of with the market, but neither of them are really doing super great though. 7 and 8% for the year. Looks like IYRY is going to pay 10 to 12%. MLPD's paying 10 to 12%. Yeah. How about that? Hey, John, how you doing, bud? Thanks for being here. Thank you for being here. So what did you think? Do you like Claude's idea? Yeah, you're right. That's what they call risk on, risk off. And it's the first to be bought, but it's also the first to go because also leverage and probably paper hands or whatever. weaker hands probably hold it in a lot of cases. Because, you know, until a couple of years ago, institutions didn't even hold it. It was just people. Yeah, energy has been rough lately and could even get rougher. I'm hearing if we, and I'm trying to think why that is, has something to do with Venezuela or something. TLTW. Oh, that's a good idea. I didn't think about that, Greg. Heck yes, that's a good idea. Let's do something like this. No, we don't want to do that. That's a great idea. Something like TLTW, TLTI. So look at this. Let's look at the asset correlations and let's just measure the correlations to Bitcoin and help Froggy out here. All right, so we're going to go, we'll use HODL for our Bitcoin surrogate. And all right, and then we're also going to look at, TLTW. We're going to look at, what's that, MLPD, and we're going to look at IYRI. And we're also going to look at, well, we'll just start with those. We'll see how correlated those are. Then I just want to see, for the sake of it, how correlated ULTY is, and blocks. Blocks should be highly correlated to HODL. I would think. I don't know. All right, so let's check out these correlations. All right, so HODL's the main one. So HODL to, okay, yeah, TLTW is not correlated. It's negative and it's a low number. So, I mean, negative 100 means it's exactly opposite, but negative and 0 means it's just not correlated. And neither is this real estate one. It's negative and 15. ULT, like I've been saying, that's why ULTY has been getting crushed. It's 97% correlated. It's more correlated to HODL than it is the NASDAQ. And blocks is 85% correlated to Bitcoin. So, but then you can look over here, the standard deviation, the annual standard deviation. And the most risky of these is blocks. And I believe that. It's like a 29. The least risky is the is the real estate one, because it's probably a real asset, you know, and it's just not very risky. Well, actually, the TLT one's even less risky. So let's look at TLTI and some other TLTs. And I mean, TLTI and what else could we check? All right. So yeah, TLTI is also not correlated at all. And it's, you know, and they're both super low volatility. Huh. What do you think, Froggy? You think that'll work? Oh, you have some REITs and you've been holding TLTW. It sounds like you're on top of it. Sounds like you're on top of it. Chucking for dividends here. Your name's Joe, right? Yeah, I think. All right, guys, I'm going to get out of here and go shoot that video. All I have to do is record myself. But then I need to go to work on stuff. I actually have 2 videos to shoot. I'm going to shoot 2 videos, and then I'll meet up with you guys tomorrow morning for the live stream. I was going to say that, and then we got sidetracked. But I was going to say, and let's go look at this. Well, it's probably too new. But what about some type of what about something like CAIE, or what about something like SBAR? I wonder how correlated those things are. Because they're based on the market, they may be more correlated than we think. Let's see. So CAIE is 90% correlated to HODL, and SBAR is 94% correlated. Let's just see how correlated the Qs are to HODL. The Qs are only 33% correlated to Bitcoin. I wouldn't have guessed that. But SBAR, why is SBAR that correlated? Let's switch it around. I'm going to put the Qs in the first position and see how correlated everything is to them. And then I'll put HODL in the second position. This will measure everything off the Qs. Okay. Yeah. So HODL's not super correlated to the Qs, but of course, but TLTW is more than you think. But MLPW and IYRY are the ones that are the less correlated ones. Also, though, we need to do this. I need to put on a better setting. Let's put it on daily returns. That was monthly returns. Some of them probably haven't been around long enough, and we'll go back 120 days. All right, this should get us better numbers. All right, so HODL's 52% correlated. TLTW's not correlated. Neither is TLTI. So that's a good pick, Froggy. MLPD, the energy one, is not very correlated. Neither is the real estate one. Of course, ULTY is correlated to the Qs. Of course it is. And, of course, blocks is too. And, of course, CAIE is. But now let's look at the individual volatilities. Bitcoin's a 34 vol, and blocks is a 55 on this time frame. But look, Calamos is super. It's only a 7 volatility, super steady. So same thing with the barrier fund and real estate and energy infrastructure. These are all relatively boring and safe, and especially TLTW and TLTI. Yeah. All right. Well, those are the candidates. Yeah, no, SBAR is holding the indices, but is it not true that the auto and SPY's total return swaps too, but the auto callables they're based on a worst of feature, right? On CAIE, the Russell, the SPY, and the Qs. And I think if the worst of them is under 30% at any one of the, at the time when it matters, right at the last day of the month or whatever, then that swap doesn't have to pay a yield. So even though it's on a total return swap, it's highly, I would think that makes it correlated right there because it's setting this price off the one, but anyway, but just the math says they're both pretty well correlated. I mean, SBAR's 85. Well, no, yeah. SBAR's only 56. That's not too correlated. But who knows? The other thing is you can look at the rolling correlations. Correlations change. When the market crashes, like in April, correlations go up on everything. So, yeah, look at April. It's the peak on, they say all correlations go to 1. In other words, hedges quit. When the market goes down, everything goes down with it. So in market sell-offs, usually lots of times you have correlation going higher. But actually these, though, in April, this one would definitely, well, of course, the Qs went higher. But some of them, though, bonds actually bonds do provide safety in the downturn. But anyway, what I'm saying is these changed, and it's just a 120-day look-back period. And depending on how far you look back, you get different results. If we just look back 20 days, we might get totally different results. On this one, SBAR's still only a 56 and Calamos is an 85. But then if you do monthly returns, then you get sometimes you get totally different numbers. On monthly returns, CIE is only 18, but it hasn't been around long enough. It probably only has 1 month or something. So, XXV, we put that on there. Yeah, I think that one has potential. I mean, SBAR is making people happy. XXV, too many. Too many. No returns available. XXV. It's because it hasn't been around long enough. Hang on. Let's put on a daily returns. All right. I bet XXV is pretty highly correlated. I bet it's an 85 or a 90 because it's just making a bet that the market won't go down more than what? 25%. It's a 25% barrier, but it's tied directly to the market. It's saying here it's a 90, 96 on correlation. It looks like maybe it hasn't been around long enough, though. I don't think it has. Let's put XV on there because I think XV has been around a little longer. Yeah, that one hadn't been around long enough. Okay, so XV is a 61 on correlation. SBAR is a 56. That's pretty good. Alt-Y is a 76. CAIE is an 85. In this time frame, CAIE is the most correlated. Let's do something like Chaos. I bet it's uncorrelated. Or, yeah, look at Chaos because it's a hedge. That's a good look right there. That's why that one works great for a hedge. I didn't see Powell's speech today. What did he say? I didn't see it. I've been hearing, I had on CNBC, but I had the volume down and I kept seeing something go across the bottom of the screen that Kevin Hassert was going to be the guy that Trump nominates to replace Powell. And he'll definitely do anything Trump wants, I think. So that I think the market should perceive that as positive. I mean, at least in the short term. But I didn't know Powell spoke. I just didn't see it. Simplify is always reaching. You hope XXV works out, and you're fine with CAIE. Yeah. XXV has a cool name. CAIE doesn't have a name like Anacarado or whatever that is. Well, what did that mean? It meant something in, was it Italian or somebody told me last night? One of you guys told me what it means. It means something in Roman mythology or something. All right, guys. So let's check the market. Then I'm going to get out of here. Hopefully this darn market still goes up at least one more day. And then hopefully it goes up Friday too. I was hoping it never goes down again. Oh, really? Okay. So he said no decision yet. So he's, and then he said far from it. Okay. Well, the market didn't perceive it back because it closed on the highs and it's going up after hours. Maybe though he said, did he say it right at 2:30 or something? Because the market was higher and then on a 30-minute bar, it kind of sold off and fit, you know what I'm saying? But still, it was kind of a positive day in the market. It may have hit the bonds worse. I mean, I have the bonds on here too. Real dollar, Bitcoin 10-year. But I just don't watch these that much. Boy, look at that. Those are rates. That's not bond prices. Those are rates. So bonds are rallying and rates are crashing down. Well, anyway, I think the bond market doesn't seem too worried about it. He's always real non-committal and stuff. Like I say, I didn't see it. I thought the next meeting was in December, and the next time we were going to get notes and press conference was December. But yeah, I didn't know that I didn't hear that he did either. All right, guys. Well, I'm gonna get out of here. We've been talking for a long time, but thanks for being here. And be looking for those videos. I'll go shoot it right now, and it should probably be out first thing in the morning. All right. You guys got a preview though of that. Oh no, that thing does look interesting. All right, guys. I will talk to you later. You guys have a great evening. See you in the morning.